Hey everyone, in this video we're going over Palantir stock. We're going to ask the question, is this stock a buy at today's price? I'm going to give you some assumptions and future projections, and we're going to decide if it's worth buying. A lot of people have been asking me about Palantir stock, so here I'm going to do a deep dive. Some of you may know I was a private investor in Palantir pre-IPO. I will share some of that information towards the end of this video as well, where I paid for the stock, when I bought it, if I sold, all of that. But before we get into it, if you could smash the like button, it really helps the YouTube algorithm. And if you haven't subscribed to the channel, please subscribe. So looking at the stock price, Palantir is trading today at around $18 a share. It is down about 36% for the entire year. Year to date, it's down a little less than that. It is also down from its peak. It had a 52-week high of $45, so more than 50% down from that peak. This stock has come down a lot. But the question is it worth buying at $18 a share? So first thing we're going to do is we're going to be looking at the Q3 report. This is the most recent earnings report coming out of Palantir, so it's going to give us the most up-to-date financials. So the first slide is basically going to go over the business highlights. It starts with Q3 revenue, which grew 36% year over year to $392 million. This is up from Q3 2020 at $289 million of revenue. They also point out, as far as commercial revenue growth, it is accelerating. So there's not only growth, but the growth itself is accelerating at a higher pace. So 37% year over year growth in Q3 in the commercial side. This is up from 28% growth Q2, 19% growth in Q1, and only 4% growth Q4 2020. So growth is accelerating in the commercial side as well. Now they talk about new customers. They added 34 net new customers in Q3. For their commercial customers, that count grew by 46% quarter over quarter. They have also grown their commercial customer count by 135% from the beginning of the year, from December 31st, 2020. Now keep in mind, this is a much smaller part of their business, so growing at a higher rate is easier for them on this side, but it is impressive nonetheless to show that they are making improvements on the commercial side, and it is starting to actually become a much bigger part of their business. During Q3, they closed 54 deals that were at least $1 million, and 33 of those deals were at least $5 million, and 18 of those deals were at least $10 million. Now, this is great news because the more accounts they have at that $1 million plus mark, we know that these customers spend more and more each year with them. So it is good to see that they are getting a lot of customers that are paying $1 million plus, even as high as $10 million plus. Q3 adjusted free cash flow was $119 million. This is an improvement of $172 million year over year, representing a margin now of 30%. The reason it is a $172 million increase when the whole free cash flow, adjusted free cash flow, is only $119 million is because they were actually negative free cash flow. They were losing money on an adjusted free cash flow base. So on Q3 of 2020, they had negative $53 million in adjusted free cash flow. Now they have $119 million. So it is swapped into the positive territory. This, of course, is a good sign because things are improving as they have more business with the high margins their company has. We're going to see free cash flow continue to raise. So that's pretty good to see that is unfolding. So the next thing we're going to be looking at is the remaining deal value. Now, the total remaining deal value at the end of Q3 2021 was $3.6 billion of deal value. This was a 50% year-over-year growth from the $2.4 billion of deal value that was remaining at the end of Q3 2020. So a lot of deals in the pipeline. That is basically, this is money they expect to be coming in from the deals that they have. Commercial deal value grew 101% year over year to $2.2 billion, and the remaining performance obligation increased 172% to $874 million year over year. We then look at Q1 through Q3 of 2021, so the year-to-date performance. We've had revenue growth of 44% to over $1.1 billion, adjusted free cash flow of $320 million year-to-date. That represented a 29% margin, adjusted operating income of $349 million, representing a 32% margin. They then start to break down the actual Q3 financials a little more specifically. So Q3 revenue grew by 36% year over year, $392 million. So we saw that from the beginning, up from $289 million. Year-to-date revenue grew 44% to $1.1 billion. That is up 44% from $771 million, which was Q1 to Q3 of 2020. Then they show Q3 cash from operations at 101 million. This is an improvement of 153 million year over year from that negative 52 million a year ago. And the Q3 adjusted free cash flow being the 119 million, which was 30% margin and up from a loss of 53 million. We then have the year-to-date adjusted free cash flow of 320 million, which is an improvement of 605 million year over year because adjusted free cash flow year-to-date Q1 to Q3 of 2020 was a loss of $285 million. So big improvements because they have high margins, so as they scale, that grows. They increased their full-year adjusted free cash flow guidance to 400 million plus, up from 300 million plus. So that is great to see that they're increasing guidance substantially. They've generated an adjusted operating margin of 30% or higher for the 4 straight quarters, and Q3 adjusted operating income increased to 116 million, representing a margin of 30% from 73 million. They added 34 net new customers in Q3, with total customers up 20% quarter over quarter, because last quarter they had 169 customers. Then before that, the quarter before that, they had 139 customers at the end of December 31st. So they are increasing customers by not just each quarter, but they're actually getting more and more customers, accelerated growth in increased customer numbers quarter over quarter. So their commercial customer count also grew by 46%. The U.S. business continues to demonstrate strong growth, with revenue increasing 45% year over year. Commercial revenue growing 37% year over year, third straight quarter of accelerated growth. Q3 U.S. commercial revenue growth 103% year over year. So the U.S. really growing in the commercial space for them. Now, the government has always been a big customer for Palantir. Their government revenue grew 34% year over year in Q3. They signed new deals with the U.S. Air Force, HHS, and NIH. The total government revenue growth was $218 million from $163 million, representing 34% growth. Were recently down selected to provide the U.S. Army's intelligence, data fabric, and analytics solution under CD2. They recapped that they closed 54 deals of at least $1 million, 33 of which were $5 million or higher, 18 of which $10 million or higher. So again, just showing their deal flow. They also show third quarter billings increasing 56% year over year to 347 million, up from 223 million. The remaining performance obligations grew 172% year over year to 874 million from 322 million. They ended Q3 2021 with 3.6 billion in total remaining deal value, up 50% year over year from the 2.4 billion. Commercial remaining deal value increased 101% year over year to 2.2 billion. This is up from 1.1 billion in Q3 2020. They then show that not only did they add the 34 net new customers in Q3, but the average revenue per top 20 customer increased 35% to being $41 million on average revenue on the top 20 customers versus $31 million a year ago. They show Q3 2021 adjusted gross margin improved to 82%. This is up from 81% a year ago. Contribution margin is 57%, up from 56%. In Q3, they generated 116 million adjusted operating income, representing an adjusted operating margin of 30%, ahead of prior guidance, which was 22%. So they did better than they originally guided to. It's always good to have a company guiding for something that they know they can achieve and actually do better than. In the 9 months ended September 30th, they generated 320 million in adjusted free cash flow, which was a margin of 29%. This is up from losing $285 million of adjusted free cash flow Q1 through Q3 of 2020. So they have now just passed that point where they are not only profitable, but they're going to, as they scale, I think be very profitable. Lastly, we have their guidance, and then we'll go through some of our own assumptions and things. So looking ahead, Q4, revenue of 418 million, adjusted operating margin of 22%. Full year 2021, revenue growth 40% to 1.527 billion, adjusted free cash flow of 400 million plus for the year, up from 300 million that they thought. And long-term outlook, they expect revenue growth of around 30% for this year and the next 4 years. So they mentioned 1.5 billion revenue of 2021, operating margin of 22%, and guidance of 30% revenue growth for the next 4 years. So if we start with the 30% revenue growth, 2022 should look around 1.95 billion in revenue, 2023 around 2.5 billion, 2024 around 3.3 billion, and 2025 we should be looking around 4.28 billion dollars of revenue for Palantir. With this number, we can start to make some assumptions. So if we believe that adjusted operating margin will increase, let's just say it goes to around 30% from 22%, then we can assume that the estimated adjusted operating income in 2025 could look something around 1.28 billion. Now, obviously, these assumptions could be completely off because they have very high margins, so maybe their operating margin at that time could be much higher than 30%. But just to play conservative and safe, I think these are safe, fair numbers to go with. And with a price to earnings of around 30 at that time, considering it will still be a growing company at a high rate, so it shouldn't have such a low PE, I think that would put it around a market cap of 40 billion. Now, this obviously, is a 5-year 2025 look at this. And if you did a 10-year look, if you want to be a long-term holder, you obviously can make these 30% growth for 10 years, then it could be worth a lot more today than if we're just looking at 5 years. So keep that in mind. And if we look at a valuation on a price to sales standpoint, I believe 10 times sales in 2025 would be a fair number, and that would also put the stock around 42 billion or so, since it'd be doing around 4.28 billion in revenue then based on those assumptions. So 10 times that gives you around $42 billion market cap. Today, the market cap right now is 36 billion. So for me, the truth is, I still think the stock is overpriced. I would not be buying it at these levels if you're in it for the short term. If you're in it for the next 3 to 5 years, I wouldn't buy it. If you're in it for 10 plus years, it's a different story. You can look at things a different way than the traditional investor might, or someone who's comparing it to stocks they might only hold for a couple years. Now, if the stock gets closer to the 20 billion valuation mark, I'd be buying it up around that price. I think that is a great deal. And the thing is, I want a great deal if I'm going to invest. I don't want just an okay deal. And at this valuation, when you're looking at it from a 3 to 5 year standpoint, I don't think it's a great deal. It starts to become a great deal if you really want to look at it as a 10 plus year deal, but there are other companies with 10 plus year time horizons that I think are better deals. So that's the tough position for me. Now, I do want to show you also, I'm a little biased because I'm used to getting Palantir at a much lower price not that long ago. Palantir Technologies, I bought $40,000 original investment, you'll see on the top, for about $4.50 a share. This was around a 9.4 billion valuation. Now, the summary on the left side shows you I bought this transaction date on the very bottom, June 18th, 2020. This was before they IPO'd, so it was a private company. I paid $4.73, my cost basis, because that included the $4.50 share plus the fee I had to pay to get these shares in the private market. You could see towards the top of the investment summary, I paid a $2,000 fee. It's basically a 5% fee on the $40,000 investment, so it cost me $42,000 technically. Now, I held this position after the IPO for over a year. I believe it was sold around somewhere between $20 to $25 a share once it was long-term cap gains. And since I purchased it less than 2 years ago for around $4.50 a share, I find it hard to be a buyer in such a short time frame since then for 4 times what I paid. Now, the numbers are improving, but I don't believe it's worth 4 times the price. Maybe 2.5 times the price would be fair. I believe that because they have improved, but I don't think 4 times just yet. Now, obviously, in public markets, valuations can get a little out of hand. And if you have a long enough time horizon, it could be a good deal even at that 4 times. It's just not a good enough deal for me. There are other deals in the private market and public markets I'd rather put my money in just now, but again, nothing against Palantir. I hope the best for anyone holding the stock. Thank you so much for watching. I will be a buyer of Palantir if it drops low enough. Please like this video if you made it to the end. Subscribe to the channel if you haven't subscribed already. Appreciate you all. Until next time.